Hey guys, so in today's video, I wanted to talk to you about the ICT Judas swing trading strategy that I utilized in order to close out this trade at a 1 to 5 risk to reward, and also this trade on Euro USD at a 1 to 6 risk to reward, netting not only myself but also all the members in the Discord community that I sent both of these trades to, and we all netted a 11% gain just this morning with these two trades. Now, 11% on a 100k funded account is $11,000. Now, that's me done for this entire month, because in the first week, me and the Discord group made 4%. In the second week, we made 3.5%. So we are so up right now that it is absolutely crazy. And because we are so up right now, we are actually having a flash 20% off monthly signals sale. So if you guys are interested, either go down in the description, click this link to sign up with the 20% discount. It's already been added, or join the Discord, come over to the announcement section and use this link right here. Whilst you're down there, please don't forget to leave a like, comment and subscribe, and let's jump straight into the analysis of both of these amazing trades. Now, the first thing that we want to do is actually pull out our Judas swing framework. Now, if you haven't done so already, I would highly recommend going down into the description and downloading this free framework that I've created so that you guys can follow along with me. Now, the first thing that we need to do is we have to understand our directional bias. So in the framework, I've written that we must be on the 15-minute time frame in order to assess where we are in our directional bias. So if we go up to the 15-minute, what we can start to see is that we've actually had a change of character right here, because we were originally bearish, making a series of lower lows and lower highs. And then after we put in this lower low, we actually broke this lower high, giving us this new higher high. Therefore, our anticipation for the London session was that we would be getting a higher low before a continuation higher. Therefore, I was interested in sells immediately as I was looking at this setup in the morning. So now that we've understood our directional bias, our next step is to understand that the Judas swing happens at the end of the Asia session between the times of 7 AM and 9 AM UK time. Now, what this means is that we only start looking for trades after the 7 AM candle has been printed. So if we take a look at this example right here from this morning, up until this very point right here, let me pull out this vertical line. Up until this very point right here, I was not looking for any trades prior. After this point happened right here is when I started to look for my trading setup. So we don't trade before 7, and we also don't trade after 9. So that is our trading window, and that is when we look for the Judas swing to happen. Now, once we've identified our time and our directional bias, we move on to the next step, which is liquidity. So we must mark out the Asia session high and low as shown in the image above. So this is now our liquidity. The Asia session high and low is marked between midnight and 7 AM UK time. So update this according to your own time zone. And after we mark out the high and low, we simply just wait. We wait until we get a sweep of either the high or the low, and then we move on to the next step. So if we come onto our charts, what we can actually start to do is mark out our Asia session. So at 7 AM, the highest candle that was printed was right there. And if we look, the beginning of the Asia session, it is what gave us our low. So that is now our trading range. So the Asia session low and the Asia session high is now marked out for us. For me personally, I use this indicator called the Asian session range, which I've configured to my own settings. So it just shows me 7 AM and midnight with this nice blue background, so I don't have to look for it myself. Now, the next thing that we do once we've marked out our liquidity is we wait until we get a sweep. So if I put the charts into replay mode and we go straight to here, what we can now start to identify is that as I play price on, this is our sweep. There we go. So now price has swept the Asia high, and our directional bias is that we're anticipating a higher low. Therefore, the sweep of the Asia high is perfect because we're actually looking for sells. Therefore, now that we've got our Asia session high sweep, we now refer back to our framework, and the next step is to wait for a market structure shift. Once we get a sweep of either the high or the low, and in this instance it was the low, we drop down to the 1 minute time frame, and then we wait for a market structure shift. So now if we play price on, what we can start to understand is that we've just had a market structure shift. Now, why have we had a market structure shift? If we start to put down where our higher highs and higher lows are, what we can start to understand is that this is how market structure was getting created. So we've just had a higher low, we get our higher high, and now because this is our higher low and we get this break right here of this higher low, this signifies a lower low. Therefore, our next anticipation is for a lower high and a continuation lower. So this right here would be our market structure shift, because it's gone from a bullish market to a bearish market. So if I remove all of this and we play price on again, we've now got our market structure shift. So now we go back to the framework, and now we move on to the next step, which is once we've had a market structure shift, we now identify our fair value gap in order to take an entry. A fair value gap is when we have exponential price displacement to one side. And in the image, we can see that I've highlighted what a fair value gap is so that we can start to identify these in the live market. Now, once we've had our market structure shift, what I've highlighted is the actual fair value gap that I used in order for me to take my entry. Now, why did I put my entry at the midway point? Because this move was quite large. As we can see, price dropped quite a long way. Because it dropped quite a long way, had I put my entry at the beginning of the fair value gap, my stop loss would have been much bigger. Therefore, what I did is I took my fib tool and I just dragged it down until I had the equilibrium, which was the 50% of that fair value gap, and that is where I put my entry. So we move on to the next step, and that simply says that we take our entry at the start of the fair value gap. Our stop will always go above the most recent high or low, and our targets will always be the opposing liquidity. So just as an example, if we took shorts from the sweep of the Asia high, our target will always be the Asia low. So now that we've got all of our steps in place, we found our fair value gap, we've identified our market structure shift, we now simply just place our sell limit, we put our stops above the most local high, and then we target the opposing liquidity. Now in this instance, as we can see, this trade was a absolutely beautiful 1-to-6 risk to reward. And now if I play price on, what you will see is that price came up, tagged this in, and then immediately started to drop. So if I come up to the higher time frame so that we're not sat here waiting for this to play out for a while, price immediately just dropped straight to the take profit. There was no pauses, no nothing, immediately just ran straight to our take profit. Very minimal drawdown and gave us a beautiful 1-to-6 risk to reward. So like I said, not only did I take this trade, but everyone in the Discord along with me was able to take this trade as well. And not only did we take this 1-to-6 on EU, but we had the exact same setup on GU, which I'll break down for you guys now. So I won't replay this one just for the sake of time. But as we can see, we've got our Asia low right here. And if we take a look at this very, very carefully, what we can see is that our Asia high is right here. That was the most highest candle within the Asian session range. And we get this sweep, which is very minimalistic, but nonetheless, it's a sweep altogether. And what do I always say? A sweep is a sweep, whether it be small or large. It's still classified as a sweep. So again, if we break down our market structure, we can see that we've got a series of higher highs and higher lows. And at this point, when we come down here, we've now broken the most previous higher low, giving us a lower low. Now our anticipation is for a lower high and a continuation lower. And this is exactly what happened. Following our framework, we had a sweep of the Asia high, a market structure shift. We identified our fair value gap, as we can see right here. And after we identified our fair value gap, all that we simply done was we placed our short position at the fair value gap with our stops just above the most local high, and we targeted the opposing liquidity. Now for this trade, my stop loss was only 7 pips wide, and I was targeting just below the Asia session low for a nice 1 to 5, and as we can see, price ran all the way to target with a little bit of drawdown. So again, it just followed the exact same framework, which was identifying our higher time frame directional bias. We waited for a sweep of the Asia high. We waited for a market structure shift. We identified our fair value gap, and we took our entry at the fair value gaps open, stops above the high, and targets at the opposing liquidity. Now again, guys, this was a very mechanical trade. This entire trading strategy is also very mechanical. This is all that I teach on my YouTube channel, because having one trading strategy is better than jumping from strategy to strategy. And as you can see, if you go back through my YouTube, you will see that I've consistently been trading this singular strategy and coming out profitable month in, month out. Not only myself, but also the members in the Discord have all done the same, and we only just follow this strategy. Of course, I trade other things as well, such as order blocks, but my main trading strategy is the Judas swing. Now, I hope you guys have had a chance to download the framework that I've got listed down below in the description, as this will definitely help you in your trading journey. And I hope you took some knowledge away from both of these trades and this breakdown, because it was absolutely beautiful that not only myself, but everyone got to make that 11% gain this morning. So on that note, guys, I hope you've enjoyed this video. If you did, please don't forget to leave a like, comment, and subscribe. And I will see you guys in the next video.